Good evening, ladies and gentlemen, and welcome to our class called Elevator Trading. It's part of our new series called Architecture Trading, which we'll be teaching over the next couple months. Now, architecture trading is based on seeing or analyzing the movement on charts based on things we understand, like how an elevator moves in a building. Now, there are many large players in the forex market, such as hedge funds and large banks, that have all advanced computer systems and constantly monitor any inconsistency between currency pairs. Given these programs, it is rare to see a major inconsistency last longer than a matter of seconds. Many traders turn to forex technical analysis because it presumes that all factors that influence price, as economic, political, social, and psychological, have already been factored into the current exchange rate by the market. With so many investors and so much money exchanging hands each day, the trend and flow of capital is what becomes important, rather than attempting to identify a mispriced rate. Okay, now, remember when we're trading with binary options, okay, we can't take advantage of a lot of things you can in forex because everything is predetermined up front. You've already decided what asset you're going to trade, what direction it's going to trade, and when your expiry is. So you can't look for just inconsistencies in the marketplace because you can't count pips and get in and out. So we have to find other ways that we can trade in the markets. And the nice thing about binary options is that we only have to find or identify assets that have momentum to move in a certain direction over a certain period of time. Now, most people that trade binary options trade what's called fundamental analysis. Fundamentals analysis is just as we said before, it's the economic, political, social, and psychological events that are factored into the market. Whereas technical analysis is done with charts and oscillators and indicators using numeric values and equations to come up with what is happening in the markets. Most people, most binary options traders, do not trade from technical analysis. Most traders don't. Technical analysis is somewhat difficult. It takes a lot of time to learn, a lot of time to practice, and it takes a great deal of education, learning. I mean, it really does. You have to be a technician. You have to really spend a great deal of time understanding exactly what is being told to you or what you're seeing in the charts or the numbers. And they're fine identifications. If you're looking like an oscillator, an indicator like RSI, MACD, you can look at the pre-programmed ones that tell you their buys and sells, but they don't work. You have to really define them very carefully by your own system to determine exactly what number means what to you and how much strength it means. So what I've tried to do is develop some type of technical analysis that is easy to understand, that is easy to apply, and works well for binary options. Now we know that trend lines and lines of support and lines of resistance are very important. And these are real basics that everybody should know. Now, a trend line is a line that goes over the price and shows you where the price is moving. Okay. Then we come to support and resistance lines. Support and resistance are like the floors above your head and below your feet. They are price zones in which the current price will stop and reverse, and resistance is a price zone where the current price will advance. So if you imagine this is like you're in an elevator, and if you're gold and gold is trading at $1,300, and I paid $1,300 across your chest and tell you you're on floor 1,300, now you don't know the number of the floor above your head and the floor below your feet. Okay. But I put you in that elevator. Now, there are equations that can tell you, based on how the price has moved in the past, what these floor above your feet and the ceiling is above your head. And this gives you support and resistance levels. Okay. Support is below your feet. It's what's holding you up. if you want to move up in that elevator, you need to push through that ceiling. And what happens when you push through that ceiling becomes the floor below your feet or becomes your support. If price is moving down, the floor below your feet is becoming your resistance because you have to break through that, and the ceiling above your head is the support. And when you fall through that floor, what happens is that becomes your resistance above your head, your support above your head, and the resistance below you. So they reverse depending on which way price is moving. And so therefore, when prices or gold is at 1,300, you can find out what the support and resistance are around there, and you can also see R1, S1, R2, S2, and R3, S3. That means you can see the 3 floors above and the 3 floors below. And just like an elevator, as it moves down a floor or up a floor, the floors above it and below it change. So they are constantly changing support and resistance as price is moving. Now, in an uptrend, price advances. In a downtrend, price decreases. Okay. Support and resistance lines are now actual mathematical calculations of prior market action and reactions. These calculations are well known, and support and resistance levels are published and easily accessible, and they continually change with price. Now, when I started trading 40 years ago, these numbers weren't available. You had to draw them on historical charts, and you'd have all your charts laid out there with all these little numbers, and you'd have to look where price was moving now and where it had moved historically, and you were doing everything by hand. Well, today you can get it all by computers. Some ways this helps us because you don't have to spend as much time and effort and be that involved in trading, and you can trade relatively faster. But I also firmly believe that when the old days when I was charting and graphing and putting little dots on charts every day and keeping all these binders and notebooks of all my charts and all my graphs and all my history, and you see huge volumes of historical data up on your walls, okay, that you were more intricately involved in the markets and feeling how the markets work, and you had knowledge based on feeling as opposed to just knowledge based on numeric values. Okay. But today works best because the advance of the computers has also made us very competitive with the big traders, and retail traders can now succeed in the marketplace because you're getting all the data and the information as fast as the professional trader, as fast as the hedge fund manager, as fast as the money manager, as fast as the pension fund. And you know everything that's happening in the markets within instants. So it lets you be very, very competitive. Now, the key to using support and resistance and trend lines is that they are the first part in technical analysis. Technical analysis looks at the history of price and tries to find similarities. Now, we do have whole classes in support and resistance where I will teach you how to come up with all these. Tonight's class is more about elevator trading, but I'm going to take you real fast to show you where we would find in the internet where you would find these support and resistance lines for those of you who don't know yet. So hold on, I'm going to bring up some live screens on the internet. They'll be up on your screen in a minute. Okay. And I'm going to take you over to the Euro-US dollar, which I already have open for you. And we're going to be watching that tonight also. I have some charts prepared for us. Okay. Now, what we're looking at is this is fxempire.com. Okay. You can use this, but you can use FX Empire, F4X Pros, Investing.com, any place that publishes technical studies. Okay. And you will find under their technical studies page, so in other words, to find this page on your own, if you just go down to Euro-US dollar, and you can see it over here, and click on the technical studies button, okay, or use the drop-down menu from the top and go on to your technical and then click on technical studies, you will find the technical or numeric equations and values for you. Okay. Now, what you do is you simply scroll down and you look for what's called pivot points. Okay. When you find pivot points, you can then see your S1, S2, R1, R2, R3. Okay. You want to look for the line that says classic. Do not use Fibonacci's, Camarillos, Woodies, and DeMarcs. And don't sit there and say, these numbers fit my little screen better. No. These are parts of trading systems. They are not straight information. So do not use these. You want to stay with classic. Okay? So we have the classic. We can then see that if we scroll up, we can see that the euro is trading right now at 137.74, and that the support line is right at 137.74. Then we go to 137.72. So the support line, the floor under your feet is 137.74. The support line, the floor below that is 137.72, and 3 below that is 137.70. Going above, the roof above your head is at 137.78, and all the way up to 2 floors up, or 3 floors up, which is 137.82. Okay. Now, you have to remember, these numbers are constantly recalculating based on the movement of price. Okay. So when you see the charts that I made for you, I made them just about 15 or 20 minutes ago, but because prices changed a pip or two, the S1s and R1s and R2s are slightly different because they were based on the price at that time. And you cannot keep adjusting as price moves, because then you're defeating the whole purpose. You're forcing your charts to fit where the asset's moving. And what's happening is, as the asset moves, these numbers continue to recalculate, and so therefore all your lines would be constantly drawn based on the current price, and so you couldn't build a system in. So this is where you get your numbers from, okay? And we're going to put these on charts in a minute. But let's go back. Now we know where to get support and resistance. Let's go back over and see how we're going to use the support and resistance. Okay. This will pop up on your screen in 1 second. Okay, now I'm just waiting for your screen to get, there we go. Tonight, we are part of our architecture series, and tonight we're going to be looking at a 4-story building, just like the one that we see on the picture in front of you. Okay. Over time, and we're going to be looking at how an elevator moves up and down in this 4-story building. Okay. And we're going to try to tell a story, because what you need to do is you need price to tell a story. So instead of going back and looking at all this historical figures, like most charting goes back and they try to envision forms. Some talk about hammers, some talk about head and shoulders. And these are all things that you've seen in the past in charts. And when the price goes up and forms the head and the shoulder, you think it's going to form the head and the shoulder on the other side. And it's, and then they have flags. They have all kinds of sickles and all kinds of weird things. Okay. Now, a lot of people who are chartists and technicians firmly believe in these. I believe if you could tell a story about the price in the present, you can then predict what's going to happen now, not tomorrow and not next week, but now. With binary options, we're looking for something that's going to tell a story now. So let's stick with our story that price is on an elevator and the elevator moves up and down. Okay. Today, we're going to be looking at an elevator moving up and down in a 4-story building, just like we have here. Okay. Now, this 4-story building on the first floor has lots of retail space. Okay, it's small little retail shops and little coffee shops and little carry-out takeaway stands, and it has lots of traffic because it's near a bus terminal, near a subway tube, and it's got lots of traffic. So in the morning, from early in the morning till the beginning of work, you see lots of people running in here, getting their coffee, in and out, in and out, in and out. Okay, the far end of the building is a big elevator. The elevator's sitting there with the doors open. So you grabbed your coffee. You got time to spare. You're early this morning. So you step on the elevator. Now you see in this elevator there's a set of 5 buttons. You're on the ground floor. There is a basement. Okay. Then from the basement you see there's a ground floor, floor 1, floor 2, floor 3, floor, or actually floor 3, and then the roof. Okay. So you got time. You stand in the elevator and the door closes. Nobody gets in with you. The door closes and it rides up to 1. And the door opens. You stick your head out. You don't get off the elevator. You stick your head out. And you look down and you see this beautiful dark mahogany wood professional suite. Big receptions up front. You can see they're all professional offices going down all the way down the sides. And, lawyers, doctors, accountants. Not big offices, but medium-sized offices, with 2 or 3 accountants, maybe 2 doctors, has a couple nurses and some assistants in the office. Okay? Not ones that will have huge traffic of people, places that will have steady flows of people. Some lawyers, some accountants. Okay? And, okay, that's it. The door closes and you ride up to the 2nd floor. Second floor opens and you see this big sign that says conference rooms. And it's got a sign on the wall, conference room 1, conference room 2, conference room 3, conference room 4, conference room 5. And now what you understand is that's where all the professionals down below have their meetings and have their thing, but they're shared conference rooms. And you look around while you're still standing on the elevator, you're not getting off the elevator because you're just moving up and down. And you see on the signs that there's nothing in conference room 1, 2, 3, or 4 today, but you see conference room 5 has a meeting at 2 o'clock this afternoon. Okay. So the door closes again. It goes up to the 3rd floor. Door opens on the 3rd floor, and you look and you can see it's storage. It's document storage rooms where all the professionals down below store all their documents, their equipment, all their other office supplies and everything else are stored up there. Okay. And then the door closes again. It goes up and opens at this finished roof deck. And you see this is where all the smokers go to smoke. Okay. So what do we have here? We have a 4-story building. I'm sorry, sir. If you're getting bored, you can go away. I can't make it any better. I'm sorry. I have somebody who said, where is this going? I'm getting bored. Well, I'm very, very sorry. Okay, so we have this building here. We can see here, this is where the smokers are. This is where we had the storage. This is where we had the conference rooms. This is where we had all the offices. Okay. Now, you now know how the building is laid out. You can now start making some assumptions. Because you see these professional offices, you know there's not going to be much traffic to this floor until 10 o'clock in the morning when all the doctors and lawyers and everybody come in. Okay. You saw that in the conference room there's not going to be much anything going up there until 2 o'clock. You figure a little while before there may be somebody going up to set the conference room. Okay. Up on the 3rd floor, there might be a little bit of traffic throughout the day going up there, putting something in storage, getting something out of storage, but it won't stay up there because whoever's going to put something up there is going to come back down to probably the 1st floor because they're in those offices. And a lot of traffic is going to go up to that top floor because they're all going to go smoking, but they're all going to come back down. Okay. So at 10 o'clock in the morning, you probably see, or from 9 to 10, you'll see a lot of traffic going up to that 1st floor, people coming to work. Okay. Once you see the people come to work, you're going to start to see that traffic going up to the top floor. But you're not going to see any traffic until going to the 2nd floor and very little traffic to the 3rd floor. So now what you're doing is you're actually making an analysis of how price might move today. Because if you were gold and you get on that elevator and you stand there, gold is most likely going to go upstairs at 10 o'clock to the 1st floor. Okay. is probably going to sit there most of the day and then come back down, that elevator come back down to the first floor, go back up the second floor, drop some people off, come back to the first floor. Okay? Then it's going to take a trip all the way up to the roof, and then it's going to come back down to the first floor again. You also know that there's a janitor in the basement, so the elevator can go down the basement. Whenever it goes back to the basement, though, it's going to come back up to that ground level, if not the first floor. Well, this is how price moves. Okay, and you can start scoping out how you expect price to move throughout a period of time. So the second floor, where we had the conference rooms, that's like an economic event. It's scheduled today at 2 o'clock. So we can expect price to go up there at 2 o'clock, and then it might go up to the roof, or it might go back down to the ground floor. We're not sure because we don't know about that economic event. We don't know, but we do know that something's happening at 2 o'clock. We just don't know where it's going to go. But we can analyze what we expect to happen, because we might see price bump up to that second floor once in the morning and come back down to the first floor. Okay? We don't panic because it's moving, because we just figure somebody went up there to set up the conference. When we see price bounce up to that rooftop and come back, we don't panic there. We expect it to come back down to the second or the first floor or the ground level. So what we're doing is we're actually making an analysis of how price is going to start moving. Okay? Now, we can actually tell this story on the charts. And when you can see this developing on the charts, you can then start making assumptions about how price is going to move throughout the day. So what we have here is, this is the Euro JPY, back a couple months ago, or back on, it was a year ago that I first did this first study. And look at what we did, is we came here and we drew the lines of support and resistance from the current price level onto the chart. Once we drew the price level onto the chart, okay, what we did is we got our roof on the chart and our ground floor on the chart. We can then tell a story. And look at what we can read in this story. We can see the price moved. Okay, this is where the story starts, because you have to have a start and an end. The end is when the start's when it moves into this pattern. The end is when it breaks out of the pattern. But what we're looking at here is about a whole day's worth of trading. Now what we have here is we can start telling a story. You can see how the elevator moved up to the first floor, came back down to the ground level. Let me just put my marker on here. Moved up to the first floor, came back to the ground level, moved up to the second floor, came back, maybe stopped down the janitor's basement, came back up to the first floor, went up to the second floor, went up to the roof for somebody to smoke, came all the way back down to the ground level, went up to the third floor, came back to the second floor, went up to the roof, somebody's smoking again, went back to the second floor, went back to the first floor, went back up to the roof, came to the third floor, came all the way back down to the first floor. Well, when you can tell a story like that, you can then analyze where price is going to go, because you've now isolated a movement. You can actually see a movement. So we know that this building, or this four-story building, is fitting into this pattern. So we can assume that it's going to continue on until it breaks this pattern. What it means is we can then start predicting where price will move. When you can start predicting where price will move, you can start making trading and evaluations. Now, of course, the safest trade would always be trading it when it hits the roof, because you know it's going to come back down. Or when it's gone to the basement, because you know it's going to come back up somewhere, because from the basement it's got to come to the ground floor, the first floor, or the roof. From the roof it's got to come back down somewhere. Okay, so those are going to be your safest trades. You will then be isolating these trades at the safest point. But you can also tell the story, because price doesn't move that fast. This is, like I said, this is over a whole day of trading. So when you saw price move up here and came up to the third floor, and you made your analysis, it might come up to the third floor later in the day, but it's not going to come back up to the third floor. You can see it come all the way back. If you see it coming back down to the ground floor, you can enter a trade going down, because it's going to continue coming to this level. Okay, and then you can start analyzing how you're making your trades, and you can track price. Now you're saying, okay, well you found a chart and a graph that'll tell us this, okay, and it looks perfect there. Can I do this often? Well, the fact is, this happens over and over again. Okay, and when you start, what I've tried to do is take chart patterns and give them to you in easy to understand stories that are less complicated that you can follow. And through the architecture series, we're going to look at high-rise trading, mid-rise trading, basement trading, because when you can see these chart patterns and start predicting them and start seeing them repeat, you can start trading successfully from them. Because you look for the charts to tell a story. And when you start recognizing all these stories, when you look at the chart, it may not be four-story building today, but it could be high-rise trading. It could be basement trading. It could be apartment house trading. And when you can start, you don't use my story. You make your own story. And if you see that analysis that you've made, okay, about the four-story building, yes, that one kind of sticks. And it's got to stay because it makes sense. What you've done is analyze where price should move and then see if the price is moving in that field. Because if you said it keeps going up to the conference room, but you looked at the economic events and there was only one or two economic events and they weren't happening and coinciding together, you need to understand why price is moving up to that second floor. You need to tell a story and make it make sense. Okay. Now, okay, I'm going to take you to, this is today. Okay, let me take my yellow markers off of here and clean up the chart. Okay, I did this chart right before class. You can see it was a 2037. Okay, this was today at the 31st. What you were looking for is for when price is trading in a sideways kind of motion, and you can go get the lines of support and resistance and put them on the chart based on where it is currently and build this building. So look at this. We have the ground floor, we have the rooftop, and you can see price moving through these patterns all day. And this is actually since the 30th. So this has stayed in this channel since the 30th. So what you could have done is isolate it, and the smartest trade, like I keep telling you, is when it hits the roof or when it hits the basement. So in other words, if you would have traded this rooftop, and you would have traded in a 10 or 15 minute or 20-minute pattern to go down, you were fine. This is an hour going down. Okay? If you would have waited till it hit the ground level and traded going up, right here, when it was all the way to the ground, it's never come back down to that ground again. So these are where you should be trading, is from the tops and the bottoms. But if you saw it come up here to the third floor, you could have waited and seen, it came up to the third floor, and now is it going to go up to the roof, somebody going up the smoke? Or is it turning back down? Once you saw it turn back down, you could have taken, again, a 5-minute trade for it to go down because you know it was going down to the first floor, if not the ground level. So you're telling a story, and this is how you see it in the current price. And what's happening is once you've told the story to here, you've validated your story. Now you want to see if the stories can keep going, and you start trading. First, you have to validate that it's really making a four-story building story or pattern, and then once you validate it, then you start trading. You just because you're not going to see this all develop. You're not seeing it after the fact that we are here. Here we're seeing it after the everything's over. But if you would have by this point, or even by this point, or by this point, said, okay, I have a true building, you could have then started trading. So you would have waited for this and seen this climb up. You would have seen the price hit that third floor and not go up to the rooftop and then turn back down, and you would have seen it right here. You wouldn't have known how low it was going. You just know it was probably going back. If it turned from the third floor to the second floor and you had no event going on in the second floor, you knew it was going to come back down to either the first floor or the ground level. So you could have taken a very short trade. When it came all the way back down here to the ground floor, you knew it was going to go back up. And then you see it because it's forming in front of you and is not laid out on the chart. So you have to watch the patterns. You have to be able to tell the story. So this is today copper. Okay. I'm going to take you right over now to the next chart. And this is the euro US dollar today. And this is on a different charting system because I just pulled it up from, this is from NetDania, I believe. Okay. And you have to get used to seeing these on different charts. Well, here was the euro US dollar today. Okay, and when I drew on here, we had the roof was, or the support level was 137.65, the resistance level, and the floor was 137.48. So I had my ground floor, and I had my rooftop, and I had my price moving in and out for, you can see since 11. Oh, I'm sorry, I lost my chart here. Since 11 o'clock last night, all the way through, and this elevator or this four-story building held true all the way until 11 o'clock tonight. Okay, now, or 11 o'clock this morning. Now, what happened this morning, we had an economic event that pushed it through. But you could have traded all of this up and down from the bottoms to the tops, from the bottoms to the tops to the bottoms to the top. Told the same story. Just look at copper. We could tell the same story on this. And then when we saw it break out and violate the roof, and that story was over. We're gone. Okay. If it would have come down and broken out of that basement, okay, with this, it's all over. You know, you can't go above the roof and break out and climb and then come back down and start over. It ends when it ends, and then it's over. You don't wait for it to continue on going. Once it's violated your ground floor or your roof, you are finished with that asset. Okay. Now, it may present itself something later, but you're going to have to start over, drawing your lines of support, validating it, and verify it, and keep it going. Anybody have any questions? If you do, just type them into the screen. So let's go over. I'm going to take you over into the live markets and to the live charts. And we're going to see, because I did these on live charts a little while ago, and I have them, the charts open and waiting for us. Okay. So this is the actual live chart of the euro-US dollar that I showed you just a minute ago. Okay. And so this is the actual price movement on today. Like I said, you can see that this is not something that was made up and didn't happen. This is on a chart. This is today's chart that you're looking at. Okay. Now, you need, the best thing for binary options is to tell this story in a 30-minute time scale. But I've done this in both of these in 30 minutes. But I also did this on a, I think I have the investing. See, now investing.com only offers you 15 and 60 second. Okay, so they offer a 15 and a 60-minute chart. So what I did is I went here and did the same thing using a 15-minute chart. For binary options, stay at 15 and 30 minutes charts. And now here, this is the Australian dollar, US dollar. Right now, this is live markets, and you can see what's happened here is we have the support and resistance levels that I drew on here before class. It was 92.66 and 92.75, and we've still passed another hour since I drew it on. And this is trading fine. We can see here, somebody got in the elevator, went all the way up the roof and smoked early this morning, came back down to the ground floor, okay, went back up, came back down, okay, did the whole thing. Somebody went to the basement, and that would have been a great trade because when they go to the basement, they got to go at least back up to the ground level. Okay. Now here they came back down to the ground, and now this is right now in the current markets, they're moving upward. Okay, now there is no trade scenario to fit where the price is right now, but we want to see if the price is somebody getting on that elevator, riding it all the way up to the ceiling, or they're riding it up to the third floor. If they're riding it up just to the third floor like they did here earlier today, it's going to come back down right afterwards because there's nothing, it's going to at least come to the second floor or the ground level. And you can tell this story. Hold on, let's see, we got lots of questions. Well, the webinar video isn't ready for a little while after class, several days, because it has to be edited and cleaned up. But then you just ask your account manager, they'll give you a link for it. The basement, no, has nothing to do with pips, okay? Absolutely nothing. The lines of support and resistance come off of the line of support and resistance chart. This has to do with line of support and resistance, or where over historical prices that the traders have hemmed and hawed to push the price through. Okay, and sometimes they're just 3 pips apart, sometimes they're 15 pips apart, sometimes they're 10 pips apart, and they change continuously. Okay, that's why you use the support and resistance, the pivot point charts to get where they are. It's got nothing to do with the distance of the pips. So you can see right now for the Australian dollar, it happens to be that they're 92.75 and 92.66, which is just 9 pips. So you need to be able to tell. Now what we want to do is, okay, whenever the price hits the bottom, hits the ground floor, you know it's going to go up, so you can trade it going up. Okay. Now, when it was all the way down here, you can trade. Now, after it's broken above the ground floor and is slowly moving up, we have no idea where it's going at this point. Okay. You need to sit still and wait. Let's see what else again. In a line chart, how can you tell how long 15? It's not how long it is. You see up here, these are time frames. These are not lengths. Okay. You said on a 15-minute time frame or a 30-minute time frame. You can tell the time by moving your arrows across the bottom. If you look at the bottom now, as I'm moving my price along, it's telling me what time it is, so I can figure that out. But this has nothing to do with time. You're looking at, these are called time frames. Charts and numbers are put on the charts in time frames. And this is a 15-minute time frame. So in other words, in the old days, if you were putting your price a dot on your chart every 15 minutes, or whatever that price was, every 15 minutes, you would put a dot at what it is at 1 o'clock, a dot at 1:15, a dot at 2 o'clock, a dot at 2:15, a dot at 2:30, and then you connect all those dots together, and that would be a 15-minute time frame. The price doesn't change. It's always the same. So, but if you were doing a 5-minute chart, you would put the price on the chart every 5 minutes. And so therefore you'd be connecting a lot more lines together, and you have a lot more movement and a lot more hills and valleys in detail. But then you got to spread out. So right now what we're looking at is I can change this chart for you. Okay, if we want to see the euro-US dollar in a 1-minute time frame, you're going to see it. Now this is a very broad picture. This is what you're actually looking at. This whole chart is 40 minutes of time. Okay, it went from 22.38, so it's 37, about 40 minutes of time. So this gives you, because you're looking at 1-minute price points. So every 1 minute they're putting a dot on the chart connecting. So it gives you, now the price is still the same. It's always 92.68. The price never changes. It is the visual effect it gives you. If you change it to 5 minutes, that means a dot was put on the chart every 5 minutes. Now, you could tell this story. Look at this story in this 5-minute time frame. But you don't rig your charts to fit your story. You start with a set of rules, and that means you're going to use a 15-minute chart or a 30-minute chart, and you stay with that. This helps give you perspective, and you can see this whole story in this 5-minute chart. Okay, look at that. I mean, it's a beautiful story, and you could do your evaluation in 5 minutes, but you can't then change it to a 15-minute. Okay. And this is what the same thing looks like in 15 minutes. Okay. And then when you move it to a 1-hour chart, this is one dot is put on the chart every hour. It's still 92.68, but all that you see is how the line's connected between those dots. Okay? Let's see. Let's see. So if hold on guys. If 15-minute chart we see good trend, shall we go for a 5-minute chart, a 5 or 10-minute expiry? Okay. Now, stock pairs is quite unusual in the binary options industry. They're one of the few platforms that offer you just to take a 5-minute or a 10-minute or a 15-minute expiry. Okay. Most of the other binary options platforms offer you a range of expiries, but they're preset times, not 10 minutes from now or 15 minutes from now or 5 minutes. It may be 15:22 now, and they may have the next expiry at 15:40, and you are stuck in that gate. So there's a big advantage to stock pairs. I always, unless you're trading some type of other strategy, I always say take the smallest risk window. Okay, unless you're trading economic events, or you're trading something that's going to happen down, later because you're expecting some kind of a trend. But I always stay in 5, 10, or 15-minute trades, because if you know the asset's going to go up, why hope for it to go up, stay up for 15 minutes? Why not hope it's just going to stay up for 5 minutes, get out of the market? So overall, the safety net is about 10 minutes. Otherwise, it's trading so fast that you can't even get in. And then you go to 60 and 90-second trading, and that's a whole different story. And we have whole classes on 60 and 90 cents. seconds. Okay, now let's see. Hold on, guys, because you're writing too many questions and I can't read them all. They're scrolling up the screen. History normally repeats itself no matter how far back. Yes, it does. Patterns tend to repeat themselves. What technicians look for are patterns. And when prices made this exact pattern before, it will probably make it again. Now, it can make it a different number, but you're going to see the same way that traders react. Now, with support and resistance lines, it's not necessarily the traders. It's hard. There are, you got to remember, as price goes up, there's got to be a buyer for every seller. Okay, and as price moves up, there is places where people historically hem and haw. Okay? There's also psychological price points. So, for instance, like natural gas, if natural gas breaks $4.50, or when the euro gets close to $1.40, okay, because it hardly ever breaks it. Now, what happens is, think about it, lots of people in the Forex market that entered the market anywhere below 140 have already preset and have sell orders at 140. They want to take their profit. So if the euro hits 140, they've already instructed everybody to sell. So what will happen is the euro hit at 140.001 and will immediately fall back down because all those sell orders will automatically be activated. And as all that's dumped back in the markets, the price is going to ease back down. Then if there's enough energy to push it back up, it'll hit that 140 again, and the new people or the people with sell orders at 140.01 are in, and they're going to kick that price back down. Then you have buy orders or sell, at different levels, and so it's not one person saying I'm going to buy and another person saying I'm not going to sell, but this is historically where they will go, and it's a self-fulfilling fantasy because what happens is a lot of people plus their stop losses and their take profit points based on lines of support and resistance. Okay. Okay, George asks, I don't understand. If a big jump comes, what do we do? If it jumps out of your story, okay, like we had here with the, let's go see what we had here. We had it here with the, okay, see right here? Wait for it, okay. See right here, let me put my marker on here so you can follow me. Right here, we had a huge price jump. It invalidates everything you've done. You're finished. You move up to another asset, you shut this chart down, and you walk away. Okay, you are finished. Okay. Now, what you would have done is down at this price, you would have traded, because that was at the ground floor, so 137.48, you would have been trading this asset to go up, so you would have made profit. All it did is also went up so high that the minute it breaks through the roof, and that's why I tell you the story about the roof, because imagine if you went up to the roof of smoke and you just jumped up higher and a helicopter grabbed you and then dropped you down the street, you're dead or you're broken legs, so you're over and done with. There's nowhere, once you go past that roof, there's no more story. You start over from scratch at a new level. Okay, so what that does is give me a warning saying, this is no longer valid. Okay, now, I finished everything on the screen, guys. You can go ask some more. Okay, now, we have to look at the sentiment, or we only have to predict the markets. Sentiment has nothing to do with this. What you want to do is, the only thing outside the chart you want to look at is you want to look at the economics calendar to see if there are any economic events scheduled for that day that are close to where you are looking at, because that's like the second floor conference rooms where they have the conferences scheduled. So you can predict that if you have an economic event coming at 2 o'clock today and it's 1:45, what's going to happen is that event comes out and it's strong, good event, good results. It's going to push that asset up. Now, it might push that asset up a little bit, or it might drop it back down. But you know that something's going to affect that asset. So if at that point it's 2 o'clock in the afternoon, that economic event's about to come out, and you are already down at the ground floor, you don't want to enter a trade because that economic event can throw your whole story out of whack. So your whole elevator's been moving up and down beautifully today, but now 2 o'clock's come, and you don't know how, because you don't know anything about the conference. You don't know if there's 3 people coming to this conference, and they're already on the first floor, and they're just going up from there to the second floor. Is it a staff conference, or is it going to be 30 people from the streets coming in for this meeting? So when this economic event is scheduled, what you want to do, this is a precursor. It's a warning to you. Do not be in the markets at this point, because it might throw your whole story out of whack. Okay, so market sentiment doesn't have anything to do with this type of trading. Okay, what you're doing is you're interpreting the sentiment of the traders by telling this story. Okay, guys, on that note, I'm going to let you all go to bed. It's late for you no matter where you are, except my guy in Florida. And hopefully you did learn something. We're going to continue throughout the next 3 months. We're going to have an ongoing series of architecture classes. And we're going to be talking about this. And you'll find that even though I have somebody very bored up there, when you can apply this story to what you're seeing on the markets, okay, or what you're seeing on the charts, you can start making trading decisions. Because what you have here is almost like, if you look at the, right here we're looking at the euro US dollar, this trade here would fit our high-rise elevator trading scenario. And when you learn that one, you could apply another scenario. So when you move right out of this 4-story building, you could have moved to this elevator scenario. And what happens? You have the elevator go up to the penthouse, and now it's coming back down slowly, gathering people. And again, you have to tell a story. This one I'm not saying fits it to its nth degree, but we have this whole series of things of how to apply it. With $50,000, can I retire if I understand the charts? If you have $50,000, I don't think you can retire anywhere. And let me tell you, I've been trading a long, long, long time. If $50,000 ain't going to get you nowhere. And it all depends on a little bit of luck and a little hard work. In the early 80s, I was a day trader at agriculturals. And in 83, I was driving a Rolls Royce, and I had all the money I could possibly want. And by 85, I was dead broke. Not from spending it either. You know, what happens is your strategies work for a while, and then they stop working. You get overconfident and too cocky, and you screw things up. And last of all, you always need a little bit of luck. Okay? A little smidgen of luck you have to have. And when that luck leaves you, I was doing the exact same trades, but I couldn't make a penny. I mean, I don't think for almost a year I couldn't make a winning trade. I mean, it was a nightmare. Okay, so and it's the $50,000. Can I retire if I understand the charts? If you understand the charts, you're still not going to understand your personality. Okay, because trading is a lot more about personality than it is about just reading the charts. And it's how diligent you are, how careful you are, how you handle money management, how often you trade, how much time you're going to put into the efforts. Okay. But if you have $50,000 in the account and you want to learn to trade very well and you take your time, your energy, you will make steady profits. I can tell you that. But you have to, I also have to tell me how much you need to retire. Okay. Do you trade 15-minute expiries on a 15-minute chart? Basically, for binary options, you should always stay on a 15 or 30-minute chart. It's not has to do with the expiries. It's the visual effects and the price movement on charts. Which support and resistance are you using? Okay, for this class we use S2. Okay, only because S1 is way, way, way too tight. Okay, and you need once you pick S2 and R2, you stay with them. Okay, so you start with a 15-minute chart or a 30-minute chart, depending on what your charting service is offering or what your personal preference is. But do not change it from that point. The hardest thing about trading is you have to set a set of rules, and you have to live by those rules. Because too many people adjust the rules to try to find a trade. If you build a strategy like we did today with the 4-story building, and you build this whole thing around it, okay, you can force the trade by forcing lots of things. You can move your R1s to R2s to R3s and make it work. but then you're forcing the trade, and all you're doing is diminishing your profit potential. Okay. The harder you are on yourself and the more strict you are about your rules, the more likely you are going to make a profitable trade and the less bad trades you'll make. It's when you start shifting the rules around that you tend to make you lower your overall win to loss ratio. Okay. Well, if you need $6,000 a month to retire on $50,000, okay, let's put it this way. I wouldn't call it retire when you have to trade every day, all day long to make or trade fairly regularly to make your profit to live on. It's still work, whether you're sitting at a computer doing trading or you're out banging a hammer and hammering in nails. It's still work. Okay, is FXCM better than stock pairs? Well, I'm here representing stock pairs. Now, how can I tell you FXCM is better? Actually, to be honest with you, stock pairs is one of the few, actually one of the only binary option companies that owns its own platform. So they avoid all the technical problems that other traders tend to have when they use a licensed platform. The other thing about stock pairs is, like I was explaining to you earlier, their expiry points are much nicer. You're not fighting a countdown in time. Here you have, actually, let's go, we got stock pairs up here. Let's pull it up and I'll show you. Okay. Okay, what we're looking at is, let's go, stock pairs platform is popping up on you. Okay. Should be on your screen right there. You go. You get it on the screen. Okay. Now, what stock pairs does is most 80% of the binary option companies give you an assortment of expiries. But like I said, they're based on not time frames. They'll say, if you're looking at this asset, and right now it is, what time is it? There it is. 9:53 is 21:53. They'll tell you you can trade the next expiry is at 21:55 or 22:05, and then one at 22:15, and you have to adjust to their expiries. Where stock pairs let you pick 60 seconds from now, 90 seconds from now, which are very fast. Those are lightning trading. But then you can pick 5 minutes from now, the next 5 minutes. You can pick the next 10 minutes from now. You can pick the next 15 minutes from now. So you don't have to worry about an expiry time. You're worried about a time frame. So this is one of the nicest things about stock pair. They allow you to pick exactly from now when you want your trade to close, as opposed to, oh, this is doing everything I want it to do. And you look at sometimes some of the platforms, the next expiry is over an hour from now. Okay, and this gives you a lot more control over when you want your trade to close. So it's one of the biggest advantages to stock pairs. The second advantage I find with stock pairs is, again, because they own their own platform and they built it from scratch just to fit them, that there's less technical problems. They also offer a very, very simplistic, clean trading screen. They make everything easy to see and make the trade very, very easy. They don't, some of the binary options companies offer you hundreds and hundreds of assets where you can get totally lost in trading all these assets, and you really don't need that many assets to trade. So they make it fairly easy here. There's all the major currencies, there's the major indices, there's the major stocks, and it's just what you need. It offers a nice variety of what you need. The last pair, and last thing that people don't enjoy that much, is the pairs. Okay. Stock pairs was the first one to offer pairs, and pairs trading can be very, very successful and profitable, because what you're trading is one asset against the other, having nothing to do with what the rest of the world and the rest of the markets are doing. Because if Facebook and Yahoo go up because technical, IT stuff is doing well today, they're going to both go up. But if Facebook's going to come out with an announcement, like when Facebook announced, what did they buy, that Oculus company last week? Well, Facebook went down because it was a ridiculous amount of money. And it was, how many things is Zuckerberg going to buy right back to back to back, and for these big investments? So you could have simply said, well, I think that's a bad choice for Facebook. And Yahoo's not doing much or anything, or they're getting some good press today. So I think between each one of these, Yahoo's can do better today than Facebook. Okay, you have the choice of trading. What do you think is happening with Google right now? Does anybody know what happened with Google, what they announced today? They've been talking about splitting their stock. Today they made it official. They introduced a Class C stock called GOOGL. And for everybody on the 27th that owned a share of Google on the 27th, keeps one share, the current share of Google, and gets a split for the new share of Google GOOGL, which is a C-class stock. Well, this is going to push Google price up, and then Google price can come down because they liquidated the amount of shares. But it was a smart move. So all of this can affect how you're trading today. You know, GM and Ford, GM had a lawsuit lodged against it the other day. So GM would have fallen against Ford that day. We don't know how far GM is going to go down, but we know it's going to do worse than Ford that day because they had a major lawsuit launched against them. So there are things that you can do in trade that are interesting here. There's also a very interesting trading strategy that you can do with pairs. Because as the day progresses, the pairs will, just because there's a buyer who bought something over here and a seller who sold something over there, having nothing to do with the two pairs, but it creates a gap between the two pairs, which the gap is going to close back down. When that, when you see these unusual gaps between the shares, okay, that just means because somebody placed a buy order on one and somebody placed a sell order on another, like I said, having nothing to do with each other, that you can then enter that and they're going to come back down together closer, and you can trade that. And there's some very unique opportunities here. So is one of the few things that stock pairs does extremely well. A lot of the binary options companies have started to duplicate stock pairs and offer pairs, but right now most of them don't offer more than 2 or 3 pairs, where stock pairs offers a huge amount of pairs. They also offer the fixed and the floating, which is, I'm sorry, I'm rambling on here answering your question, but this is one of the advantages to trading stock pairs. Thank you. That's why I love stock pairs. Whoever said that, I appreciate that. You can use a 2 or 3 hour. Somebody asked about a 2 or 3 hour time frame. You mean an expiry or a trading time frame? I don't understand what you're. You mean from 60 after 60 minutes? Well, the thing is, it's not very popular. Okay. The end of the day is very, very popular because you're expecting economic events where you can always, if you want a 2 or 3 hour time frame, you can just take the 60 minutes, just wait 60 minutes to get into it. You just can't offer everything to everybody. It's just too many things. Now, the other binary options, they offer you preset expiries based on time or time, clock numbers. They will offer something that's 2 or 3 hours later, but it'll be at 18:45 and then 19:25, and you have to take those closes. Okay, let's see. I am not making progress and I'm still losing money. Then you should start trading slower and come to more classes. Okay. Somebody asked me, so you can't be a millionaire in a year with $50,000 in your account if you trade regularly. Well, from $50,000 to $1 million is a huge profit with making no mistakes. Okay. And the fact is, I couldn't retire on $1 million. If you gave me $1 million and you gave me today, most places are paying 2% interest, that is $20,000 a year in interest. Okay, you told me you need $6,000 a month. That's $72,000 a year. So if you have $1 million, you need to find someplace paying you 7.2% with taxes. You're going to find somebody paying you 10% interest on your money if you want to retire to have $6,000 a month in income. Okay, so like I said, in reality, I also don't know when you want to. So you're not asking to retire. You're saying 1 year. Now you think. If anybody's promising that or you think you can do that, good luck to you. I would be very happy if I can steadily trade all year round and turn my initial investment into a 25% overall profit throughout the whole year. Most people are very happy with a 12% return. If you can do 25%, that means you can take your $50,000 and walk away with $62,500 at the end of the year, and the next year after that, walk away with $77,000, and the year after that, walk away with $120,000. That makes sense. I don't think you could trade that often and that high of a profit level to turn that. Do you believe that I have a chance to make 60,000 euros, 6,000 euros in 5 months? I have no idea. Like I told you, trading is more about your personality. Okay, it is simply about who you are, the effort you put in, the time you put in. Okay, it has nothing to do with the amount of money you put in. Okay, because to me, a good trade doesn't make a difference whether you're trading $10 or $10,000. A good trade is a good trade. Okay. And so I never look at the amount of money you are investing, and I never look at your account over somebody else's account. So if somebody else has $1 million account and you have a $1,000 account, you tell me you trade euro and this is why you trade, this is what you did, and somebody else tells me that, I don't ask you how much you invested. It doesn't make a difference. Okay. Guys, on that note, I will say goodbye to you, good night to you. I hope to see you in our next classes. I think we have a class tomorrow, actually. Because we're changing the schedule and the times of the classes now that we went into daylight savings time, and summer's coming here also. So hopefully I will see you in tomorrow's class. Thank you very much for joining us. And George, keep me in touch. If you make that $1 million, I'll take a commission out of it. So guys, have a great trading day, and we'll talk to you soon. Can you please tell me how much per trade? I have no idea what you're talking about. How much you're going to invest per trade is based on your portfolio and how much money you have to invest. That's money management, and that is not part of a trading strategy. That's a whole different strategy. But my recommendation is never to invest more than 8% of your portfolio in any individual trade. Thank you, the Florida guy. I'm actually from Palm Beach, so I love Florida also. Thanks, guys. Have a good night now. Bye.